All right, investors. Today, let's analyze Visa shares. And by the end of this video, you will be able to answer the question, is it worth buying Visa stock? Or maybe you should buy shares of Visa's competitors, closest peers. And also, what could be the selling price of Visa shares if you buy it? I mean, the stop loss and take profit. Let's say you are reading news and you saw the Visa company in the news. Visa maintains a buy rating, and here you have still holds a buy rating from Jefferies, and you don't know is it worth buying this share now or not. Let's do the fundamental analysis, express fundamental analysis, and then we do the technical analysis and see what could be the selling price of the Visa shares. So let's start. First, I have this Google Sheets prepared for you. If you don't know how to undertake vertical and horizontal analysis, how to connect FMP add-on, you can watch my previous video. I explain everything in more detail and what to look for when you do vertical and horizontal analysis. I will put the link down to this video, to the description, to the comment section, and you can watch it. To use this Google Sheet, I will mention briefly, you will need the financial modeling prep add-on. I will put the link to the installation instruction. It is very quick. And you also need the Google Sheets open. Then you change the ticker. Again, this table is in the previous video. How to build this table, I showed it in the previous video. For now, let's put the Visa ticker. It starts with just V. Hit go or enter, and now you see financial statement. So it's an income statement, this one is balance sheet, and this one is cash flow statement. And below, over here below each statement, we have a vertical analysis. So based on this vertical analysis, as we can see, we compare everything to the base number. So revenue in the income statement analysis is our base number, and we compare everything to the base number. And based on this analysis, we see stable cost of revenue. Always pay attention to instabilities. And if you see instability, go to the financial statements, read auditor's notes, read the management vision on the company. Maybe you will find valuable hints. In our case, cost of revenue is very stable. It means that the management is controlling its direct costs, direct expenses very well. A gross profit, you should compare with the peers. Visa should have highest gross profit margin in comparison to its peers. But not only that, it should be also stable. It should not vary greatly. 3-4% is good. For example, 80, next year is 83, the next year is 80 again. It's good. But if it is fluctuating and varies more than 3%, 3-4%, it's bad. It means that the management is not controlling company's direct costs well. But in this case, we have more or less stable numbers. Again, if you see instability, go to the auditor's notes in financial statements and read what was causing those instabilities. From the balance sheet side, we have good cash portions. Although I don't like that they have a lot of cash because it can create operational risk. Cash can be damaged, something can happen to the vaults where the cash is stored. Cash and cash equivalents, it also may include some short-term equities, short-term stocks, but I don't like when they have a lot of cash because, as I have said, it creates certain operational risk. But since they always have this cash, maybe they have special plans like short-term investments. They can use this cash for these purposes. Now let's look at irregularities over here. As you can see, everything is more or less stable. Also pay attention to the short-term and long-term debt. As you can see, the long-term debt is also stable every year, which means that the management is controlling costs, controlling debt very well, debt repayment schedule very well. And this is the great sign for Visa shares. From the cash flow statement side, also pay attention to certain irregularities. For example, you had here 104 in net income. Again, this figure, if you're interested, you can look at the formula. It is comparing net income to net cash provided from operating activities. This N, we can look at this, net cash provided by operating activities. So this is cash from operating activities. Operating activities is main company's activities, and net cash is if you see the positive number, it's a good sign. It means that the company generating cash from its main business. And as you can see, there is 104 and 220. There was a spike, which may indicate some extraordinary gains, some one-time events, or there were some accounting adjustments. To understand this, again, go to the financial statement, go to the auditor's report, and see what was causing this spike. Again, we see stability here when we talk about Visa shares. If we go to the horizontal analysis shows the growth from year to year, and you can see each number, how it was growing. You should pay attention to the revenue. It should be expanding, it should be growing. You can compare it to the closest peers. To get the data for the closest peers, go to Financial Modeling Prep website. You have here Stock Peer API. You just have to register with FMP, obtain your custom API key, and then press here, input your stock ticker, or use this endpoint, and it will show you closest peers. As with example, for example, for Apple shares, it is giving us closest peers. Let's try with Visa shares. Let's see Visa's closest peers. As you can see, we have a PayPal at the closest peer. We can take the PayPal for our analysis and then compare all those peers, do the same vertical and horizontal analysis, compare irregularities, and choose the most stable company with rising revenue, ideally with declining costs. And you should pay attention to how well they repaired their debt. You should see good numbers from the cash from operating activities, and this is how you should compare it to the closest peers. Now, when we go to the ROIC, WACC analysis, WACC is the weighted average cost of capital, and ROIC is the return on invested capital. Watch my previous video. I will put the link to the description. If you're interested in building this table and understanding what is WACC and what is ROIC, basically we are comparing companies' costs on attracted funds like equity, bonds, bank credit, on profits that the company is making from this attracted funds, on its attracted funds. And let's replace it with Visa shares. It is recalculating everything. Again, we are using financial modeling prep data for this analysis. I will put the link on the description on how to get your custom API key. You just need your API key, you just need the add-on to use with Google Sheets, and you are good to go. And I also put the link to this video. You will be able to watch it. Again, the cost for attracted funds, equity, and bonds is 8.21%, but the return Visa is making on its attracted cost is 31%. And the ROIC WACC ratio is 3.87. This number should be higher than of closest peers. For example, if we take closest competitor PayPal, as we indicated earlier, PYPL, let's see for the PayPal shares. As you can see, PayPal has the smaller ratio. That means that Visa looks more attractive. Let's return to our Visa. It has 381. Now let's look at the target prices. What I pay attention here is I see what was the recent target price change. As you can see, it is recent, like 9 days ago, dated on 13th of September. You see the name of the investment analyst and the target price that he assigned for the company's shares. Always pay attention to recent target price changes. This was long time ago, so it may not be relevant right now, but these are recent target price changes. You can see the average price among those analysts. Let me put the average. 320 is average price. And you can also use another great FMP endpoint. Again, the list of endpoints in the previous video, you can see, watch the previous video. It's basically FMP price target consensus, and you choose the stock ticker. And then you will be able to see all this data. As you can see, the highest target price 325, and the consensus or average target price among all analysts is 291. And you can also compare it with the closest peers and choose the stock with first highest ROIC ratio and the highest growth potential. The growth potential is the difference between the target price and the market price of the share. But based on comparison with PayPal, Visa looks better. Based on vertical and horizontal analysis, Visa company looks stable. More stability means higher forecastability when it comes to stock target price calculation and when it comes to the free cash flow forecasts making. And higher predictability means that analysts will calculate the stock target price with higher accuracy, and there is a high probability that the market price will be reaching this target price slowly. That's why stability is very important when it comes to the stock analysis. Now let's look at the technical side. Let's do the technical analysis very quick. Let's input Visa share. You can use your trade terminal for this analysis if you want. This is the Visa share, how it's trading. I am using the candlestick analysis and the daily chart, so each candle represents 1 day. Then I'm using very cool Chrome extension. It's called Stock Analyzer. I will put the link to the description to this video. You will be able to install this Chrome extension. It works only with Chrome because it's a Chrome extension. And again, what you should do here, very simple. Obtain your custom financial modeling prep API key. Again, the link will be in the description. Once you obtain your key, you simply input the stock ticker. In our case, it's Visa. And then you press the calculate button. And now it shows you the current stock price, the market price. Then it shows you the stock target price calculated on the conservative DCF model. You can see 188. And very interesting part that we are interested in right now is the stop loss and take profit. So let's say you want to buy this share right now at the current price to 74.96. If you buy at current price, then your stop loss, the level at which you sell with loss, would be 263. And your take profit, the level at which you want to sell with profit, would be 294. So we can write down these numbers, 294. And the level at which you are selling, let's say you don't want to bear a lot of losses, and as soon as stock starts declining, you want to sell this stock. But at what point you should sell this stock? You can use this simple stock analyzer that is analyzing stock standard deviation, and based on this standard deviation, provides you recommendation on the stop loss and the take profit levels. So in our case, let's draw the lines. Again, the stop loss would be 262. 262 approximately, but always try to put it close to some round numbers because usually larger volumes are happening on the round beautiful round numbers. That's why I try to put them on the round numbers. And the take profit is 294. 294 somewhere here. Let's put it close to the round number, somewhere like this. And it would be even better if your stop loss and take profit is close to the support and resistance level. So in our case, the support level somewhere here at 262, 261, so very close, and our stop loss level is very close to this support level. So this is a good sign, and as you can see, when the stock was approaching this level, the volumes skyrocketed. That means that there was a large buyer who was holding the stock price at that level. This is the good sign. And in our case, when it will approach this level, there is a probability that it will bounce back. Probably you can establish this level slightly higher at 200, I mean, even slightly lower at 260, because there is a high probability that it will bounce from here, maybe even lower, below this support level. You see the huge volumes over here. And when it comes here, there is a slight probability that it will bounce back because there is a large volume, support volume. Of course, this large player may have already bought everything and there would be no strong support on this level. We never know, but we can protect ourselves, not sell earlier, wait until it reaches this point, and if it's not bouncing back, we sell at this level. And when it comes to the take profit level, it's a level at which you sell with profit. Let's say if you want to buy at the current level, then you will get 7% return on the shorter term. This is for shorter term trades. When as soon as Visa gets 7% return, you are selling this share, and indeed it is close to the maximum. If it's breaking the maximum on the current market environment, when larger players are taking hold position, there is a low probability that it will go further because investor confidence is slightly lower than it used to be. That's why it's a good time for income stock investors and shorter term investors. And when you see the break, when you see stock already gained 7%, it may be a good time to sell on the shorter term. And this simple Chrome extension is telling you when you should sell your share. So thank you very much for watching. This was Express Analysis. This is how you should undertake Express vertical and horizontal analysis. Check for irregularities, compare with peers, do WACC ROIC comparison. This is very important indicator. And then use the simple Chrome extension to define the exit point from your stock. And also calculate the stock target price, see the stock target price extracted using the financial modeling prep endpoints. Thank you very much for watching this video. I hope it was useful.